Hi, Naimul. Thank you very much for having me. Looking very much forward to this.
Brilliant. Let's start with a little bit introduction from your side. If you'd like to tell our audience your background, go as deep in past as you want to. So we leave it open to entrepreneurs and investors.
Sure. So yeah, I'm actually an entrepreneur myself. So I'm very much fond of these kind of events and the work that you do to promote entrepreneurships and startups. I think it's so very, very vital for the ecosystem, and we will probably get back to that. So my journey actually started back in 1999. I started studying computer science, and also my best friend from those years, Eric, and we started a couple of companies within the sector of software development, consulting, and also started building a couple of different software businesses. And then I was sort of struck by the entrepreneurship thing in life. So since then I've been an entrepreneur, and I will not run through all the different companies I've been involved with, but you can find most of them on my LinkedIn profile. But the short version is I started a lot of different companies, most of them from scratch. Some of them were bootstrapped, where we started and started generating revenues ourselves. One of them were actually started by an accelerator in Gothenburg, so it was started with external funding, and we sort of lived by also raising a lot of funding for that company. That was a hardware company actually building ballistic protection material for the defense industry. So that was kind of different. And then if you fast forward, I ended up in 2010 at Almi Invest. And if you're an entrepreneur in Sweden, at least, Almi is a state-run organization. They're huge when it comes to loan funding for both startups and also more traditional companies. So they are a very big actor in Sweden. And they also have a venture capital arm. So I joined that arm, Almi Invest, in 2010 and started doing early stage investments from that organization. I stayed there for 7 years. And maybe we will get back to that, but that's where I fell in love with investing in software companies, and the software as a service as a business model was starting to, you started to see that coming more and more, and I really fell in love with those kind of companies. So actually the two first companies at Almi I invested in were SaaS companies, even though they didn't call themselves that at that point in time, but they were cloud companies, with a cloud-based service that they sold for with subscriptions and with the B2B context. So that then I was sort of in love with that, and been working and investing in SaaS companies since then.
Very, very interesting journey, like having that computer science right close to when we had that millennium bug. It was 2000. So 99, you were very close to that. So you got the entrepreneurship bug from there.
For sure.
Then building from scratch and bootstrapping, and then going into Almi Invest. Almi Invest is doing a great job. Joachim Carlson was here a few months ago, so they have their hands full right now.
Sure,
a lot of work. so great work over there. If we may, so building a company from scratch, bootstrapping, versus being responsible for giving out money to the companies through Almi Invest. How was that experience? Like, what was the feeling like? What is it? The same feeling? How do things change when you switch hats?
Yeah, I think it was a lot of learning, actually. I think you have to sort of change your mindset from being an entrepreneur, as you know, and everybody on this knows it's about making things happen. You have to sort of push yourself forward every day, make things happen, be very tactical and operative, and sending emails and making calls and trying to arrange meetings, recruiting, and so on. But when you change to the other side of the table, obviously you have to stay away from the tactical stuff and trying to be more strategic and making sure that the company stays on track and doing the right things. But on the same time, I think that was part of what's good being an investor, but having that experience and having done the entrepreneurial journeys before. But I think you can connect to the entrepreneur on a good level because you've been in their shoes, and you can sometimes you can at least share some experiences and stories and problems that you run into, even though every company is different. So I think that was it was a good background to have when starting doing investments.
Okay, great. So that kind of played into the role that you had. But how active are the VC funds or investment arms? Like how operative you usually go in startups? Or is it still very strategic? Is it board engagement? Like what's the level generally?
Yeah, I mean, generally speaking, I think good investors, they are active, of course, and the platform usually is the board. So the board sits in a way between the owners and the management. And I think it's a good governance model where you sort of separate ownership questions from the day-to-day tactical questions, and we've seen that so many times when companies form, and in the beginning, the entrepreneurs, they're both the owners and the board and the management. But over time, you bring in maybe more investors and shareholders, and you need to start separating this different discussion into different sort of rooms. And that I think is something where, for instance, I'm an investor or seasoned investors can help entrepreneurs to keep the discussion focused on the right thing in the right room, so to speak. So and then the board, of course, is very much around helping the entrepreneurs with making sure that we have the right strategy, making sure that we allocate resources in a good way, deciding on sort of the budget for the year or the budget for the coming month. Are we aiming for the right things? Are we using the resources we have in the best way, and so on? And then I think it's to be successful in those kind of questions, I think you need to be a little bit away from the operative stuff. But on the same time, I think also it's good if you have investors that actually want to, from time to time, actually be pretty close to the company, because in order to be a good owner and a good board member, you actually need to know the company fairly well.
Yeah.
So, and the way to do that is actually to interact with the company. For instance, helping them with the recruitment, being a mentor to other key people in the company, being maybe joining for a customer call or a product workshop, not in order to have all the answers yourself and being like, I know how to do this, but to bring in perspective and most of all maybe listen and see how this company works, and okay, here are some strong people we should be careful about. Maybe this person have ended up in a wrong position. Maybe we can change something around this, the way we organize, so that you then can be strategic in helping the entrepreneurs when forming plans for the future. And so I think it's trying to find a balance between being close to the company, learning, helping, but not being too tactical, of course, because then you usually lose sight of strategy and the long-term planning.
No, but that's very interesting point that you bring up, like what's the role of the board, like bridging the owners and the operative management, and making sure that we are steering in the right direction. And then when a startup expands to a stage that they have investors, and then more and more investors join on the board, in your experience, it's usually that everybody is on the same side, or do investors and startups you have seen are on two different tracks?
Yeah, that happens sometimes, for sure. And it comes back to questions around how you brought in those shareholders. I mean, I guess we'll touch upon later when it comes to valuations and raising capital and so on. But I mean, over time, a company evolves, and maybe you have done a couple of rounds where you brought in some angels and maybe then a smaller fund and so on. And as time goes by, people, they have different appetite for risk and for ambition, and suddenly, we have owners that have been part of the company for 5 years.
Okay.
And they are maybe in a situation where things happen in their life, and they would like to sell the shares, and they maybe even the shares have increased in value, and they say like, okay, I want to take some money home. But the newer investors, they're more interested in keeping the momentum and keeping on growing the business and raising more capital. And so you can start getting sort of a bit of friction within the owners, for instance. Shall we continue on this high growth path, or should we try to maybe start finding a new owner for the company, maybe looking for an exit? And then it's really good that you sort of, as a board, make sure that the owners are on the same page, so that the board can work on, you know, one plan and one goal. That's things that can happen, you know, when owners want the different things. Then it gets really tough for the board, not the least for the entrepreneurs and the management team. And then it's good to have a seasoned board that can, you know, tell the owners, like, you need to be on the same page now. And for instance, have a good chairman in the board that can maybe help the owners facilitate, you know, what's the agenda right now. We need to have one goal, otherwise it will be as messy.
I think that's a very, very, very good advice when it comes to startups. So for our community, like, board is kind of the steering place for the company, and if there is some sort of disagreement, it's a great place for everybody to be on the same agenda, because that's very important. Communication, same vision, same growth trajectory, because then you can grow faster together. But great points, Johan. Thank you so much for sharing that insight. Let's go a little bit into what made you start Cloud Capital. Like, what were the underpinning reasons?
Well, I mean, as I said, I started investing around 2010, and 2013 I started a community called Stockholm SaaS and Online Business. So it's a meetup group, and you can find it over at meetup.com. And started organizing meetups for SaaS companies, and that quickly grew to around 700 people, and we had regular events all the way up until COVID. And what I saw was that they, of course, companies that share the same business model, they also share a lot of the same questions and challenges and so on. And I realized that sort of there's no one out there that are specialized in funding those startups. There's a lot of funding coming into the tech scene generally, but there's not much specific funding for SaaS companies. And then I also was sort of a little bit obsessed with the idea of helping entrepreneurs staying in control of their companies for longer, because I've seen a couple of times from Almi and other investors that companies get a little bit too diluted shareholder-wise early on, and that ends up making it very hard for the company to steer down the road when the entrepreneurs are no longer the major shareholders. So, you know, the idea for Cloud Capital in the beginning was I wanted to launch actually a loan fund. So taking, you know, learnings from Almi and the SaaS world and offering loans to SaaS companies, because in my view, SaaS companies are very good, you know, clients to have to make loans to, since they are recurring revenues with very high gross margins. They're very good to loan to, because they're a pretty safe clients of a loan fund. So that was the basic idea of Cloud and we started as a loan fund, started operating 2018. And so I left Almi 2017 to start up, and we raised a small fund together with a couple of investors. And then started doing a couple of loans, which worked out very, very well for us and the companies. But over time, we also realized that it's a lot of fun to be shareholders in the companies, and that you can help them more when you're an investor rather than just providing a loan. And to be honest, we also had a little bit difference to increase the amount of loans fast enough. So we saw that this will not turn into like a sustainable business with just providing loans. And in the same time, we've done a couple of investments that was turning out really, really well. So we said to ourselves a couple of years ago that let's focus more on the investment side. So we actually stopped doing loans, and also actually all the loans are now paid back. So it's been we discontinued that business, and now we're focused purely on doing investments into SaaS companies.
And when we talk about investments, and I do realize that loans and investments are two different things. Loans being that you are very much focused on återbetalning, like repayment. But
exactly.
then maybe SaaS is a great place to be, because these companies can pay back, as opposed to if you're trying to create a consumer community that probably is years away from regular revenues. So we've seen all those entrepreneur pitches. But when you switch to the regular investment side, how does that work? What stage do you work with? And
So we decided to go in a little bit later, and part of it is we're not a traditional VC. So for those of you who know the VC world, or don't know the VC world, the VCs, they are typically investing early or a bit later, but they are typically investing for companies that can take on a very high level of risk and try to grow extremely fast. And we are sort of not very fond of that model, because we think that a lot of companies actually fail with that model, because you increase the risks really high, or you put on a high risk on the companies. And in a VC model, that works out, because as long as you're a shareholder in a couple of companies that make it, that will pay for all the ones that fail. But we really don't like that model, because we want all the companies to succeed, and then of course there will be different outcomes. But so we're looking at companies that maybe not fit in the VC model. Maybe the market is a little bit too small, or they're growing a little bit slower than a typical VC is looking for. But there's still room, for the company in the marketplace, and it could turn into a great investment. It's just that we're looking for companies with a little less risk. So we typically enter companies when they're around 1 million euros in ARR or in revenue. So typically they have a bunch of customers and a bunch of employees. Maybe they've been bootstrapped or raised a little funding before, but they are typically operating very close to being profitable. And now they want to try to increase the growth or maintain growth by investing in different things, and they need more funding for that. And I think what we're also adding before, not least money, but we're also adding, of course, our operating experience from being entrepreneurs ourselves. And now, of course, we have a portfolio of 11 companies, and they're all doing really well. So we have a lot of experience now from being in that phase, somewhere from 1 to 5 million euros, I would say. We've seen a lot now when it comes to scaling up a product organization, recruiting a go-to-market team. Oh, sorry. I see the question in the chat. The 1 million euro ARR. So 10 million SEK. Yeah, 10 million SEK ARR. Sorry about the confusion. So we like to be, pretty active in the company. So we join them in the board, and then help them with different things that actually is pretty much the same or very similar from the company when they're in the same phase. So we can make use of things we learned in the previous companies, and it comes down to, of course, a lot of being sure you have the right strategy, making sure you invest in the right places. Recruiting is key always, and usually the companies, they are having an ambition that they want to raise more capital further on. And that's part of like designing the plan in what should we achieve in order to be able to raise more funding down the line. So that's some of the things that we typically work with our portfolio companies.
Got it. Very interesting that you're not looking for, not exactly like a traditional VC where there are hits and misses, and you're trying to take a huge risk, and then you're saying, okay, this is the unicorn coming out of this entire basket. So I think a very interesting strategy you have, that all companies, majority of companies must succeed. So I think that's a great way of looking at it. How does it change if another investor jumps on board? Like how does that become if a VC joins, a traditional VC, which has that portfolio hit or miss mindset when they join, or is it smooth?
To be honest, we haven't had the typical VC come into our companies afterwards. I think this is companies that are growing a little bit too slow for the VCs to. but of course we had investors coming in after us, but they have also been investors that may be more or less the same sort of appetite as we have. Sort of, I would say that one term in this environment is like growth funds, and that implies sort of they are not maybe VCs, that they are looking for. Everybody's looking for growth companies, but the growth funds are a little bit more, they can take on companies growing at 50 to 100%, whereas the VCs, they have been, at least until recently, looking for companies growing at 200% and more. Those are very, very rare when it comes to B2B, at least out of Sweden. So but I mean, but going back to your question, actually we work with the VC where actually we came in after the VC. So there's been a VC with the ambition of turning this company into a unicorn, and down the line everybody realized that maybe this business idea and this team and market is not going to make a VC return. And I think that's been I don't know if it's been a challenge, but there have been some discussions from time to time with this VC on how do we allocate resources, how much money should we raise. And it's taken a while, but I think that now after a couple of years, we sort of found each other. I don't think that the VC in this company think that this investment is the most exciting one in their portfolio.
Okay.
But for us, we will make it out into a fantastic company, and I think we will make a great return on it eventually. And the VC also, I mean, they will earn a lot of money on this investment as well. But I mean, as you said, they're looking for unicorns, and they are sort of they get a little bit bored when the companies are not growing as fast as their best ones in the portfolio. And I think that's a part of what you should take with you as an entrepreneur, that if you have the luxury on bringing in a VC, because I mean, I'm a super fan of the VCs. I think they are awesome, and they are needed if we're going to build the really breakthrough companies and that really change an industry or similar. But on the other hand, you should be aware of that they are also very transactional and very smart. So what happens if you sort of, after a while, sort of, how to say, you sort of start not growing as fast, you take another path with a company where your growth is slowing, and everybody's sort of realizing this will not be the next unicorn. Actually, the VCs, they will sort of leave. Okay. They will sort of be more and more passive. They, of course, maybe will answer your emails, but they will probably leave the board, and they will think that you're kind of boring because they have a Spotify or a Dropbox or a similar company that they want to allocate most of their fund into. So, I mean, that's the backside of not succeeding when you have a VC on board. And that's, I mean, it's just something to be aware of. So, yeah.
No, but the very good point, and we have this, let's see, we have this question coming in here as well, or a observation. Yeah. Okay, so Anne has a question. In the current economic climate, is the fast growth expectation outdated and even unsustainable or unsustainable, whichever way we put it? Yeah.
I think yes and no. I think, of course, we've seen the last 12 months or the last year or so that the landscape has changed dramatically. I mean, you start looking at the public market where valuations are down between 90% and as much as 90% on really fine software companies. So of course that will change things even in the private market. And as the question alludes to, yes, there's been a lot of shifted focus into looking for profitable companies. Looking at companies that can grow with the good unit economics. And that was maybe not the case a year ago and before. Then it was like growth at all cost. So yes, that has changed. With that said, I would say sort of the VC world, they are still around. They still have their funds. They are still looking for the unicorns. So I mean, on balance, yes, there's been a lot of focus shifting into being profitable or having really strong, underlying profitability, even though the company as such maybe not be profitable. So, and I think that's great. I mean, that's the sustainable way of building a company, making sure that the revenue sort of you can use the revenue for your costs, and then that everything balance out at the end of the day. But there's still, I mean, if you're a super ambitious entrepreneur and want to change the world, there are VCs out there and they're looking for the next unicorn. But as I said, on balance, there's been a shift towards profitability for sure.
Very good point, and I think I resonate what you're saying. I worked in a very fast-growing company. In a 5-year period, we kind of made huge strides on revenue side in terms of growth. The point is, like, is it too late when you have been consistently focusing on growth at all costs, and suddenly switching to, for us, it was a catastrophe. It was a complete culture change, because it's not that you just need to take one metric off and shift to profitability. On surface, it looks easy, but then the entire system, the way you are sourcing things, your cycles are set up on a growth, on a hyper growth model. So how do you take that off and build a business which is based on stable metrics? So
I mean, it's super hard, and I think, for instance, you can just look at it. I've been following since we did an investment in the early days of cloud in the Swedish e-sign company called Scrive, and then I always follow very closely the huge incumbent is DocuSign, and they're listed, so you can actually listen into all their calls on the quarterly reports, and if you follow them, as I've been doing the last like 10 or 15 quarters, you can see that they ran into massive problems after the COVID. I mean, during COVID, they were not able to, fulfill the demand. All the salespeople were just, throwing contracts out every waking hour, and they had huge bonuses. Everybody got, stocks, options that turned all of them into multimillionaires in dollars. And then, everything changed, because at one point, everything just stopped because everybody bought an e-sign solution, and then the economy shifted when the restrictions changed. And now they've been the last 12 months, they've been on a huge problem with resetting everything. Everybody left, everybody in the go-to-market organization just left because they were not able to sustain the high, bonuses, and the stock totally tanked. So everybody who got options, their options were worthless, so they have been forced to do like this total reset of the company.
True.
So you can just read up on that. I think it's a super fascinating story, and who knows if they will ever come back into being like a really strong growing company. I mean, they're still growing at around 20 to 30%, so it's a fantastic company still, but so much things must be broke inside now. Or broken inside now after being part of those fast transitions. So, I mean, it's hard. It's really, really hard.
True. I can relate to it. Like, we had that year in our fashion footwear company. So 2008 was a huge growth year. We grew by 48% or so. That was huge given the size of the company, operating at $50 million at that time. But so everybody was on, we called it steroid bonuses. So 8 gross bonuses to the management team and the second tier. And then next year, suddenly nothing. So it was like it was a huge personal thing. And then at the same time, I was looking after the marketing function and the sales function. Just switching the entire sales organization to a different mode. It was
hard.
It was very difficult. So it was just a chaos for a year or 2 years. So great points over there. And I also believe that you are carving a very interesting positioning in the market, which is more growth focused and not scale focused as the VCs are. But let's take a couple of questions which are coming up over here. Absolutely. So Sebastian is basically asking, could you elaborate what you have in mind when you say that all companies in the portfolio should succeed? I'm curious about what you define as your metric for success.
Yeah, so I think we're actually looking at, with as little risk as possible, making sure that we can do between 2 and 3x on our investment in maybe 5 or 10 years. So that's the easy way to measure it, like looking, but it will take time until we know. But lowest risk as possible for failure. So we don't like to, betting on a future investment round, for instance, as we've seen a lot of companies been doing the last 5 years. You just assume that you will fund the company with more capital in 18 months. And then you just build out the organization, increase the costs, and it's been working out for a lot of companies. There's been so much capital around, so everybody has been successful in raising more capital every 12 to 18 months. We never went that path with our companies. And I mean, it's not like that we decide that. We're just looking for entrepreneurs that want to operate in that way. That we use the capital that we take in to do investments in the business, to strengthen it when it comes to product and go-to-market efficiency. And when we have those answers in place, usually the company grew a lot, have strong metrics and a good position, and then we're able to raise more funding, not because we need to, but we want to in order to continue to invest. And those rounds that we've done with companies after we came in, all of them has been at healthy, increases in share price. And none of them were done because, the company was running out of capital. It was because we wanted to attract more capital to do investments. So I think that's another metric you can just look at and say, okay, have the company raised more capital? Yes. Have they raised at a higher valuation? Yes. Have they raised not because they needed to, but because they wanted to? Yes. So that's a couple of ways to look at if this model is working or not.
Great. And if we go to the deal flow, usually VCs talk about deal flows, and then they have these huge deal flow coming in, a lot of screening, several layers of staff screening out things, and then they pick up something. How does it work for a company like Cloud Capital? You also are active on startup forums. You recently moderated Breakit Saas Summit, and you have also run a startup community on Meetup, as you're saying. So how do you identify the cases to go after, or the cases identify you? Or curious about that.
Yeah, well, I mean, it goes back to as you have picked up. I mean, I've been in this scene since 2010, and in doing exclusively doing SaaS since maybe 2013. So that's been 10 years. And Stockholm, in that sense, is very small. So I guess when companies form and they start talking to people, they ask, who should I talk to about SaaS? Everybody, sooner or later, someone mentions, have you talked to Johan Crona? So, I mean, I've been in a very fortunate position that I wouldn't say all, but there's been a lot of companies coming our way the last years because we know this. And there's a lot of people who are good at investing. There's a lot of people who have done good investments in SaaS, but there's been actually very few that's been focused on SaaS. I mean, you have all the VCs, they're doing SaaS investments, you have investment companies, angels. But if you look at their portfolios, most of them, they do consumer marketplaces, they do games, they do maybe food and other interesting things. But we stayed very, very focused on this business model, which is SaaS. So it's been very sort of easy in that sense also to be very, very structured and strict in that. Now, actually, we're starting to see a little bit more SaaS-specific investors forming. For instance, Hannah Mayton, who used to work at iSettle, and she was at Meltwater before. She started a SaaS fund just recently, and so on. So there's more coming now, and I think entrepreneurs, of course, they want to have as knowledgeable investors as possible on board. So they will always look at, if they can choose, find investors with a good fit for their journey. So
you're right, like the specialization, generally, even in the VC space, there's a lot more specialization happening. Two things happening. One is specialization in terms of verticals, and then a lot of early stage VC formation. Yesterday, for example, InVenture announced an angel fund. And in SaaS space, we have Vendep Capital, like Sami from Vendep Capital has been on a couple of pitch sessions with me in Nordic Startup Festival and some previous interview. But great to see that specialization coming in. Let's pick up a couple of other questions and then go to our other. Let's see. So Anne has a question. Does SaaS as a business model have better profitability rates than other business models in your view, or does it really depend on the solution? Thank you, Anne, for the question.
I would say yes. Typically, I mean, the gross margin on selling one more license for a cloud service is could be very close to 100%. But then, of course, if you factor in that you need to have servers and you need to have some support personnel, then you typically think about having gross margins around, 80%. It's a sort of like a middle of the park benchmark. So a company with 80% gross margin, the rest is, gross profit that you can choose whatever you want to invest it in. And so if you're good at allocating that capital, when you reach a bit of scale, the sort of implicit profitability in a company should be somewhere around 20 to 40%. But then, of course, it comes down to you want to maximize growth, or how much growth in conjunction to profit do you want to have. But when you're reaching, and that's just something that we work a lot with our companies, when you're reaching, above 10 million SEK in revenues, then actually this is becoming a question. And like, do we want to show profitability? How much do we invest in different things? So that's the thing that you have in mind all the time. But I would say there's few other business models with this kind of profitability characteristic, for sure.
Got it. Thank you. We take more questions here. So Maria has a question. For someone who wants to make a career shift into VC from an engineering background, what advice do you have? How important is it to have entrepreneurial experience for building up the right skill set as a VC?
Yeah. So, I mean, we're not the VCs. I'm not sure how qualified I am to ask, but I mean, I would say typically, as you said earlier also, I think it's one path to take is to be very specific and making sure that you know something very, very, very well. So if you're an engineer, I mean, I wouldn't say that it is a must to have an entrepreneurial background. It absolutely helps, because VC, at least in the early stages, is very much about connecting with entrepreneurs. Good entrepreneurs, they will have multiple choices when it comes to investors. So the trick is every VC, the key question for them is, how do we make sure that we can stay attractive to the entrepreneurs? So that's what the VC are looking for. People that can make sure that they get into the hottest deals. That's what it all comes down to. So, I mean, if you're an engineer and you have been working in a sector and you can stay sort of very specific into one sector, that may be one path, to make sure that you know everybody in the sector, that you know all the companies, all the startups, all the investors, what new companies are forming, so that you, be sort of the go-to person in this very specific niche. So that's maybe because then it gets very easy for a VC to understand that what you bring to the table. Like, okay, we like to invest more in, deep tech stuff when it comes to nuclear. Okay, here's an engineer with a super track record when it comes to spotting nuclear startups. Maybe a dumb example, but I think the point is coming across. So, yeah. Great
points, Johan. I'll just add a point to that. I believe the power of community needs to be considered. Johan, you have a community on the SaaS side. Startup Grind is a community. There are so many other startup communities. The network effects of communities and the power of connecting with others is so important to have if you are trying to branch out into, as an entrepreneur or a VC or an angel, into the space. Use community. Startup Grind is always on the lookout for amazing people to take the community forward. So get in touch. We'll get you involved in some way in startup grind.
Yeah.
So really happy to have that. Let's see. Let's take a couple of more questions, because I also want to go a little bit into your learnings from Breakit Saas Summit, but we will take it after a couple of these questions. So Shaina has a question. I'm curious, when you are looking to invest in a SaaS company, how often do you look at the people operations and how they plan to scale? With so many layoffs at the moment, I wonder if this is part of the due diligence when investing.
So say again, how much do we look into?
How often do you look at the people operations and how they plan to scale?
Yeah, I mean, when we invest in the beginning, then the companies are typically very small. So I was thinking about if any of them had like a proper people operations at that point. I would say that they hadn't that typically. But I mean, if you look at it broader, as I think that it's in the question, it's like how important is the people operations broadly when doing due diligence? Then it's like 80-90% of the investment is what kind of people is around the table.
Okay.
What's the characteristic of the founding team? What's the first couple of key hires that they brought on board? That's typically says a lot about the company. The founders, of course, very, very important, but also the first, 2-3 hires that the company does, extremely important, because that says something, or it says a lot about what kind of people can they attract, what kind of culture is this company building. If you sort of, have companies that settle for, decent people, and I don't mean this in the wrong way, but you can see from if you look at the management team and, the first few hires, like this is not a strong setup. This is people that are still learning a lot on the job, or very junior, or I mean, it's nothing wrong with being junior, but you can sense that they have a long way to go. If you compare that with maybe a team that attracted a more seasoned entrepreneur or a seasoned operator, or someone that's really, really strong in their domain. So that sets companies apart a lot. So in that way, I think that's 80% of the due diligence, understanding, the people, the entrepreneurs, and the forming of the management team. At least that's for us. So yeah.
Got it. I think we have a similar question here. Let's see if I can quickly read it. For all the fledgling new SaaS startups, apart from user growth KPIs, what is the key team attitude micro goals that you look at for in a roadmap, team, or pitch?
Apart from user growth, yeah. I mean, as we talked about earlier, right now, I would say you're always a bit more, what do you say, skeptical to high growth. I mean, you have to look further into understanding that growth. I think a lot of SaaS companies have in the last couple of years missed to understand the difference between like renewals and churn. So they think they have a low churn, but that's often not the case, because they're growing so fast. So the churn in absolute numbers are very small compared to the total base. But if you look at sort of the renewal rates, you will actually see pretty early that you have, from a lot of times, you have actually a really low renewal rate. So I mean, out of four clients in a cohort, maybe 2 of them leaves. But the MRR is very, very, very low. So you say like, we only have 3% churn, and everybody's like, 3%, that's great. But no, actually the renewal rate was only 50%. So that means out of every company or customer that was could renew or not, half of them left. Okay, so why did we sell to them in the first place if 50% of them are already out the door? So I think that is kind of, you have to look beyond just the growth numbers and to understand deeper what's happening in the customer base. And when it comes to the other part of this question, is like the attitude and micro goals. It's an interesting question. I'm trying to understand, see if I have any learnings to share here. I mean, when you're doing due diligence in a new company, you try to spend as much time as possible with, the entrepreneurs and the management team. And of course, you look at So the personalities, the attitude into problem solving, are they sort of on the same page? So I think we try to understand a lot of the, for instance, what's driving them. I mean, why are they forming this company? Why have they joined this company? What are they striving for? So that we don't end up, as we talked about earlier, in a place where people have different visions for the company. Someone wants to go the VC route. Someone is more looking for a profitable, stable company to bring home a nice salary for the family. And it's nothing wrong with either or, but you don't want to have a team with disparate, people want to do different things.
Alignment.
So making sure that they're all on the same page, that they are very sort of, that they have decided that they're on the same journey. I would say that's a key.
Good point. Susanna has a question. It's on pricing. Any suggestion on pricing? Better to keep it lower and onboard more clients, or better to charge more? Where do we start? Better to start high, then go low, rather than the opposite?
I would say, I mean, if you have the option that you can actually sell higher, I would, of course, you should do that. I mean, that's one of the things that you can see early on. At least that was a trend. A lot of the least last 10 years in SaaS businesses, that everybody started out too low, and you realize that you can increase your prices a lot, and that's not a big problem. I mean, it's always fine. You can always just increase prices as you go along. That's never been a problem in SaaS. But I think if you want to, for instance, make a strong case for investors that we're onto something here, your ability to charge your clients a lot is a really, really strong data point. Because then that comes into like, okay, your clients are seeing a lot of value out of this, so they are happy to split with or pay a lot, for your service. So not least if you're trying to bootstrap and so on, then the amount of revenue that you can bring in will be very important. So try to start as high as possible, because that sort of gives you more confidence that the solution that you built is valuable.
Okay. Andrew has a question. What's the best way to find a team for my SaaS solution that I want to start to build? So maybe a general,
well, I would say that now is probably a better time than it's been the last couple of years, because now, as we talked about, there's been a lot of layoffs. And where do I find it? I mean, as you said, the communities are great places to hang out. If you're looking for technical people, then go to the super techie meetups, because that's where the developers are hanging out. Or the other way to look at it is like, if you're targeting a specific industry, make sure that you learn a lot about that industry, and then over time you will actually sort of be able to identify what kind of key people are in this industry. Can I use them, to find talent that are maybe working in this industry, in the incumbents and so on. So yeah.
Got it. We take one more question, and then I'm coming to that summit question. Are you seeing an increase in sustainability-focused SaaS startups? What areas are they focusing in? Do you see a lot apart from carbon calculations, climate offsetting compensation, or collection of sustainability KPIs?
Yeah, for sure. I think this is a super interesting topic, and something that I am leaning into more and more. So I would love to invest more in climate or sustainability focused companies. I think there's a lot of different very, very promising sectors, and as in the question, yes, there's a lot in the sort of just measuring part. I think that's a good starting point, because from the beginning, all the companies out there, they need to understand what they have in order to understand their footprint when it comes to CO2 and other sustainability goals. But now we're starting to see, companies, for instance, leveraging AI to make a better purchase decisions. So assisting companies to actively lower their carbon footprint by doing more stricter procurement processes and so on. So that's one area I think is very interesting. But yeah, it's growing fast. There's also when it comes to like in the how do you say, the in between like SaaS and fintech, you have like how do we fund good climate projects, like decarbonization projects. So we're seeing a couple of companies there who sort of help investors understand how can I invest in sustainability projects. So there's a lot happening in that space in between SaaS and fintech.
I think it also has to do a lot with the regulatory and reporting requirements that are coming in on the sustainability side, which is putting a pressure on all companies, irrespective of scale, to even up to small and medium enterprises in terms of reporting, being more sustainable. So that is going to be an area to work. If you're building an idea, it's a good area to go in with the SaaS idea. But if we try to kind of avrunda or kind of summarize today's discussion.
No, it's already been an hour.
Yeah, you were recently moderating the Breakit SaaS Summit as well. What were some of the key learnings that emerged from that day?
Yeah, so for instance, I would say, I mean, there was a mix of, a very grim outlook for the economy. We have a war, we have inflation, we have higher prices all over the place. Everybody is talking about this recession, which is, everybody knows it's coming, but still not that bad, but it's what everybody's talking about. So that was in one part of the sort of the backdrop. But with that said, I would say there was a lot of positivity when it comes to both the presenters and all the audience, all the companies, investors. All the companies are still doing great. Companies are selling, even though maybe at a slower pace, but SaaS is so robust with the recurring revenues that you have. So all in all, it was a very positive, sense in the room. From like an entrepreneurial perspective, we had 2 talks with Jens Nylander from Automile and Oskar Höglund from Epidemic Sound. And they were both talking about, staying true to the way that you want to run your startup. So I think that was very sort of refreshing that, they had been on a journey where they listened a lot to their board members, they listened a lot to their investors. They sort of tried to use the playbook that all the other companies in the world are using. And then they sort of stopped and realized, no, this is not the way that I want to build my company. Or we as a founding team. And of course, that was not without some maybe argument with investors. But now if you look at both those companies, they've been very, very successful. So that would also, I think, a very good point in like staying true to the way you want to build your company and don't listen too much to, the cool VCs and people like me who seems to have all the answers, because at the end of the day, it's the entrepreneurs they're in their companies from day to night and doing all the hard work. So they typically know best.
Brilliant. Johan, I'd like to thank you on behalf of Startup Grind that you could take time out and be here with us. We are exactly at 1 o'clock. I won't hold our audience longer. So maybe somebody didn't get the lunch. Now is the time to run and get your lunch before the work starts back again. But thank you for being here, Johan. Thank you for sharing your insights, deep experience of the SaaS sector. And I'm very curious about, I've not been to one of your meetups, so I'll definitely join your next meetup. Whenever you looking forward to it. And that's also for our audience here, like hunt up the community. Somebody pasted a link over here. So check it out and interact, I would say. That's the best way to move forward.
Absolutely. And thank you very much, Naimul. It was a great discussion and lots of very thought-provoking questions. So thank you very much for inviting me and well done with the hosting.
Thank you. Thank you so much. Take care.
All right. Take care. Bye.
Bye-bye. Bye-bye.